Alright, so Tesla stock hit its first technical support at the 38.2% Fibonacci's retracement, and it seems it wants to react. Today, it is stabilizing above this support, and if everything works out, Tesla could trigger a short-term bull rally in this bear trend, aka dead cat bounce. In this video, we'll study Tesla's price action, we'll compare it with the indices, and we're gonna talk about statistics. So if you like some statistics, this video is for you. Let's start our complete multiple time frame analysis on Tesla stock. My name is Nathan and I welcome you to the Finance Hydra channel. So first, let's start our multiple time frame analysis looking at the 1 hour chart. This chart is quite clean because I want to study with you guys right now at this moment. So what do we see here? A bear trend. Tesla is doing lower highs, lower lows. What's more, it feels like we have a purple trend line connecting the previous top levels on Tesla. And if we duplicate this purple trend line over here to connect the previous support levels, we see that Tesla is inside a descending channel. Now, any bullish reaction over here near the bottom level of this descending channel is totally acceptable. It is even expected, but Tesla will remain bearish as long as it remains inside this descending channel. We gotta see a crystal clear breakout from this resistance level over here in order for us to believe that Tesla has any decent chance of reversing the trend in the daily chart as well. So short term speaking, Tesla is in a bear trend inside a descending channel. There is no bullish reaction on Tesla yet. However, in the daily chart, it feels like we are trying to stabilize just above the 38.2% Fibonacci's retracement support level, which is the first support level on Tesla. In fact, Tesla is right now, mid-term speaking, also bearish because it did a lower high, lower low, and it did trigger this head and shoulders chart pattern, which is a classic bearish reversal chart pattern. And right now, Tesla is just supposed to seek lower levels. Since we hit the first Fibonacci's retracement, there is a decent chance that we're gonna see a bounce on Tesla, and a pullback after a head and shoulders chart pattern is very likely. It is totally expected as well. If we take a look at some statistics, let's look at some statistics over here. Where is my website? It's not my website, it's Thomas Bukovsk's website, the author of Encyclopedia of Chart Patterns. A head and shoulders chart pattern has a break-even failure rate of 19%, which is quite low, average decline of 16%, and a pullback rate of 68%. 68%. So there is a very high chance that if Tesla finds a bottom level above the 38.2% Fibonacci's retracement, we are gonna see a pullback to the next resistance levels. This does not mean that Tesla will reverse the bear trend and engage a bull trend from here. This is not what I'm saying. What I'm saying is that we have a very high chance of triggering a pullback in this bear trend. The above numbers are based on more than 2,800 perfect trades. So here it is, a few statistics for you. And since we are here, check my website. If you want to use a state-of-the-art trading approach with a solid public track record, check our website, link in the description, join the top 5% family. Now back to Tesla's chart. Okay, so if we find a support level over here and react, that's totally expected because a pullback occurs 68% of the time after the breakout of a head and shoulders chart pattern. If we actually trigger a pullback over here, the next resistance level is $187, almost $188, because this key point was our previous neckline over here of this inverted head and shoulders. It was a crystal clear support level on February 13, on March 2 as well. So what's more, if if we use the 21 EMA as a resistance level as well, we'll see that this key point is a dual resistance level. So the $188, the $190 area over here is supposed to work as a resistance level on Tesla from here. Now, it is quite interesting to analyze other indicators on Tesla, especially comparing it against the indices because right now the broad market is in a very complex situation. The S&P is losing this descending channel downwards. It is losing its support level over here. It feels like it is oversold. And if we see any meaningful bullish reaction on the S&P or on the Nasdaq index as well, the Nasdaq is a little bit more resilient because it is still at its support area over here at this red line around 11.9K. So if tech stocks react above this support level, if we close above this red line over here next week, then probably we're gonna see a bullish reaction on Tesla. There's a decent chance it is going to trigger a bullish reaction. The problem is we see a lot of mixed signals. Yields are also dropping. The 10-year yields are also crashing over here. So this makes the situation a little bit weird to read, but it is quite impressive to see the fear index VIX going up nearly 20% right now. So it feels like investors are just cautious or even panicking in this situation. But remember, if Tesla triggers a bottom sign in this area, we might see a bounce. It is not gonna be a true reversal yet because there is no bullish reversal chart pattern on Tesla yet, but a pullback to this area over here is totally plausible right now. If we take a look at the weekly chart, in the weekly chart from this top level to this bottom, Tesla found a resistance at the 50% Fibonacci's retracement. Right now, we did find a resistance over here, and Tesla failed miserably in breaking this key point. Right now, we are losing the 38.2% Fibonacci's retracement as well. If we keep dropping, if Tesla actually keeps dropping, then technically speaking, it would seek this gap area over here at 146, which is at the same price level where the 61.8% Fibonacci's retracement is. However, there are some good news, okay? There are some good news. If we take a look at the monthly chart, for instance, let me make this a logarithmic scale. If we take a look at the monthly chart, it is not the first time that we see that kind of erratic movement because Tesla found a support level over here in this area, which in the weekly chart, if we take a look back at the weekly chart, this support level over here did work as a resistance on July 2020, did work as a support level on September 2020, and right now it is working as a support level again. In the monthly chart, we are doing a piercing line candlestick pattern above this support level. We did trigger this piercing line last month, and right now we are correcting in the beginning of March. Just like Tesla did over here, let me see, at this support area over here in this month on June 2019. We did trigger a piercing line candlestick pattern in this support level. So yes, just like in 2019, we did a piercing line candlestick pattern. We triggered this piercing line candlestick pattern above this support level, and in the following month, we corrected roughly 6%. Right now, we are correcting 15%. However, that's quite understandable because in this piercing line, we went up 20%. In this piercing line, we went up 40%. In sequence, we went up 18%, while last time we went up 8%. So it feels like this is a quite symmetric movement. So honestly, I'm not that surprised to see Tesla correcting from here, but I do expect that it might bounce to higher levels because statistically speaking, this is what Tesla does most of the time. So right now, let's pay attention on how Tesla is going to react from here, and let's watch closely the 187, 188 resistance level. Are you still here and you are not my subscriber? Come on, subscribe to this channel to keep in touch with my daily analysis. Click on the like button to support me. Subscribe to my newsletters. The link to my website is in the description of this video. I really appreciate your audience, my dear friends. Have a great weekend.